let's say for example, let's take the company Infosys, right? Let's take the company Infosys. Now, let's say somebody in your workplace or maybe your friend asked, or you asked your friend, how is Infosys doing? And your friend said, Infosys is doing awesome. Meaning, the stock is doing awesome, or this, the company's revenues are awesome, or your friend says Infosys is doing awesome. Now, what does awesome mean, right? It's such a very vague, generic term. Now, to your friend, awesome probably means that Infosys's revenue is probably growing at 20% per month, 20% per year, sorry. So Infosys revenue is growing at 20% per year. Yeah. Now to you, 20% is, well, 20% is nothing. To you, awesome may be actually any company whose revenue grows at 35% per month. Yeah, revenue growth. So you are beginning to see the role corporate finance plays here. Without the aspect of revenue growths and margins and things like that, it's very difficult to objectively come to a decision about a company. You could just go on arguing forever on what is good and what is not good. Another example is, let's say you're working in a company and you're trying to decide. You probably work for a restaurant business and you want to see if you want to launch a new chain of dosa restaurants. I'm a South Indian, I like my dosa, so let's just stick with the dosa for now, right? No offense to you if you're a North Indian. I really like North Indian food as well. So dosas, right? That's a pretty nice, delicious looking dosa. So maybe in your company, you're trying to decide, should you start a dosa restaurant, or maybe you just, teaming up with a bunch of friends to understand if you should do a dosa restaurant. Now, if it's just a bunch of friends doing it, you can just go back and forth forever discussing the pros and cons of a dosa restaurant. Maybe if you're a South Indian, you'll probably say dosas rock. I love dosas. I'm sure they're gonna work. If you're a North Indian, you're probably gonna say, no, dosas suck. Maybe a pav bhaji place is better. So you get that. You can just go on forever discussing the pros and cons of this and never come to a conclusion. Whereas if you were, if you take this course, or at the end of this course, what you could actually do is you can have a very objective, quantitative discussion on this. You could probably say, okay, this dosa restaurant in year one, this dosa restaurant is going to make 1 lakh in profits. This dosa restaurant is going to make 1 lakh in profit in year one. In year two, this dosa restaurant is going to make, excuse me while I just make this a little more clear for you. In year two, this dosa restaurant is going to make 1.5 lakhs in profit. People like your dosas, they're coming back for it, they're going to make 1.5 lakhs in profit. In year three, you make maybe 2 lakhs in profit. So you see where this is going, right? So now you can have an objective decision. You can basically say, okay, to start a dosa restaurant, we need to initially invest rupees, let's say 1 lakh for the sake of easy calculation. Yeah, we need to invest rupees 1 lakh. But in 3 lakhs, in 3 years, at the end of year 3, we actually have how much? 4.5 lakhs in profit. We actually have rupees 4.5 lakhs in profit. So you can actually say, hey, if we invest 1 lakh in this dosa restaurant, we actually multiply our money by 4.5 times. So it's a fantastic business. Let's definitely do it. After that, there's no more discussion on if what food you like and any of those things. That's another role corporate finance plays. And also you probably constantly hear about foreign investors and a lot of Indian investors of late who constantly stress upon this need of running a business professionally, running a, making professional decisions, don't have family-run businesses professionally. This is what they're talking about. When they talk about this, is what they're talking about. At every step of this life cycle, we are actually making professional, unbiased, objective decision using different corporate finance techniques. And of late, especially in the last 10 years, as you see more and more foreign investors and professional investors putting their money inside Indian companies, they are beginning to demand this very, very often. So you're already seeing a huge sea change in the way Indian corporates are beginning to professionalize the business. So keeping that in mind, our objectives for this course are to the entire course is we're going to learn how to interpret and analyze a company's operating and financial performance. A company, it's running day-to-day business. How do we understand, is it a good business? Is it a bad business? How do I make a good business? How do I make a bad business a good business? This course is going to help you understand and make those decisions, number one. Number two, at the end of this course, you will also be able to use corporate finance as a decision tool for strategy and operations of a company. Like, do I need to expand? Where do I need to expand my company? Or do I need to raise money? When do I need to raise money? And things like that. Third objective is that at the end of this course, you will learn how to value your company. You've built this company. What is your company worth? There is different ways to do that. This course will help you to understand how to value your company, how to raise money for your company, and how to negotiate terms with investors while you're raising money. And finally, this course will make you fairly competent in Microsoft Excel, and it's very important you learn that as part of this corporate finance program, because that is a fundamental to any analysis you will do in this program. And the way we will go about doing this is we will begin this program, the next few sessions, we will start focusing on the financial statements of a company, the income sheet, the balance sheet, and the cash flow statement. Then we learn how to analyze these statements. Then we will start exploring the whole concept of valuation of a company, the different ways a company is valued, dilutions, how to approach investors, how to raise money. We will talk about all those, and finally we'll conclude the course with a few sessions on mergers and acquisitions, that is how to buy and sell companies, and how to use Excel as as part of financial modeling in this whole corporate finance program. So I'm very excited that you are decided to take this course. I look forward to seeing you in the next session, where we will actually start discussing the income statement or the profit or loss statement. Thank you very much for your time. I'll see you again soon.